Something just broke in the global financial system that you need to hear about right now. I'm talking about an event so significant that it will be studied in economics textbooks for the next 100 years. The Chinese government has just pulled off the most brazen act of financial warfare in modern history. They didn't announce it with fanfare or press conferences. They buried it in a technical document on the Shanghai Futures Exchange website at 3 a.m. local time. But make no mistake, what they just did is the equivalent of lighting a fuse on a nuclear bomb. Ladies and gentlemen, the free market for physical silver in China officially died on February 11th, 2026. And when I tell you what this means for the global supply chain, you're going to want to sit down, because the implications of this move will reach into your wallet, your retirement account, and your future. This isn't just about China. This is about the entire world waking up to a reality that the elites have been hiding for decades. The Shanghai Futures Exchange, which handles more physical silver delivery than any other exchange on planet Earth, just implemented what they're calling an allocation adjustment policy. But let's call it what it really is, a complete and total ban on the public taking delivery of physical silver. The new rule is devastatingly simple. Starting February 28th, any trader without a government-approved industrial hedging license will receive exactly 0 ounces of silver when their futures contract expires. 0, not reduced delivery, not delayed delivery, but absolute 0 delivery for anyone who isn't a state-sanctioned manufacturer. Think about what this means for a moment. You could be a Chinese billionaire with $100 million worth of silver contracts, and when delivery day comes, the exchange will hand you a check instead of the metal. You have no choice, you have no appeal, you get paper, or you get nothing. This is rationing on a scale we haven't seen since World War II. The Chinese Communist Party has effectively declared that every single ounce of silver in their territory is now a strategic national resource. If you're not building solar panels, if you're not manufacturing semiconductors, if you're not contributing to China's industrial dominance, then you don't deserve to own silver. The official explanation is laughable. They claim this is to stabilize market volatility and ensure adequate supply for critical industries. But anyone with half a brain can see through this propaganda immediately. You don't implement emergency rationing unless you're running out. You don't lock the vault doors unless the vault is empty. China is telling the world, in the loudest possible way without actually saying it, that they have a catastrophic silver shortage. Let me walk you through the math that terrifies Beijing. China's solar panel industry alone requires approximately 150 million ounces of silver per year to maintain current production levels. Their electronics manufacturing sector needs another 80 million ounces annually for everything from smartphones to military radar systems. Add in the electric vehicle revolution, the 5G infrastructure build-out, and the missile defense systems they're frantically installing along the Taiwan Strait. You're looking at total industrial demand exceeding 300 million ounces per year in China alone. Meanwhile, China's domestic silver mining production is roughly 110 million ounces annually. Do you see the problem? They need 3 times more silver than they can dig out of the ground. For years, they've been importing the difference from global markets, buying up supply from Peru, Mexico, Australia, and Canada. But something changed in the last 6 months. The supply stopped coming, or more accurately, the price needed to secure that supply became politically unacceptable. Because here's the secret that the Shanghai Exchange is trying to hide. The real reason they banned public delivery isn't to protect industrial supply. It's to prevent a bank run on silver that would expose the fact that Chinese institutions have been running a fractional reserve scam on precious metals. The major Chinese banks, the ones with names you'd recognize, have been selling silver certificates to wealthy Chinese citizens for years. These certificates promise the holder ownership of physical silver stored in bank vaults. Millions of Chinese families bought these certificates as a hedge against yuan devaluation and real estate collapse. But here's the ugly truth that's about to surface. The banks never bought all the silver. They sold certificates for 10 times more metal than they actually possess, assuming that nobody would ever ask for delivery all at once. It's the same fractional reserve fraud that banks have been running on gold for a century. But then something unexpected happened. The Chinese real estate market collapsed even harder than the government anticipated, and wealthy Chinese citizens started demanding their silver. They wanted out of paper assets and into hard metal that couldn't be confiscated or devalued. The banks couldn't deliver. They tried to buy silver on the open market to cover their promises, but global supply had already dried up. Every ounce they bid for pushed the price higher, which only made more certificate holders demand delivery. So the banks went crying to Beijing. And Beijing did what authoritarian governments always do when faced with a financial crisis. They changed the rules to protect the system and screw the people. The zero delivery rule isn't just about futures contracts. It's the first domino in a series of policies designed to freeze Chinese citizens out of the precious metals market entirely. Sources inside China are reporting that the major banks have quietly suspended redemption of silver certificates indefinitely, citing administrative processing delays. Those delays will become permanent. Meanwhile, the Chinese government is using every ounce of available silver to keep the factories running. Because if the solar panel production lines shut down, if the electronics assembly plants go dark, the entire economic miracle that the Communist Party has built its legitimacy on will collapse. They can't afford a shortage, so they're nationalizing the supply without calling it nationalization. They're taking the metal from private hands and giving it to state-owned enterprises. And if you don't like it, well, you should have thought about that before you trusted the Chinese government with your wealth. Now, you might be thinking this is just a China problem. You might think that we in the West are insulated from their internal policy decisions. You would be catastrophically wrong. The Shanghai Futures Exchange is not an isolated market. It's connected to the London Metals Exchange, the COMEX in New York, and every other major trading venue through a complex web of arbitrage relationships. When Chinese traders can't take delivery in Shanghai, they don't just give up. They go shopping elsewhere. They start buying contracts in London and New York and demanding delivery there instead. This is already happening as we speak. Reports from London bullion dealers indicate that Chinese-linked entities have increased their delivery requests by over 300% in just the last 3 weeks. They're draining the vaults in the West to compensate for being locked out of their own domestic market. This creates a terrifying chain reaction. The London vaults supply not just European buyers, but also fabricators in India, manufacturers in Japan, and mints in the United States. If Chinese demand suddenly floods into these markets, there simply isn't enough metal to go around. The Western exchanges will face the exact same crisis that Shanghai is experiencing right now. And when that happens, when the COMEX and the LBMA start running out of physical inventory, they will do exactly what China did. They'll implement force majeure clauses, they'll suspend delivery, and they'll force cash settlement on contracts that were supposed to be backed by real metal. The zero delivery policy will go global. We're already seeing warning signs. Several major silver dealers in the United States have quietly extended their delivery times from 2 weeks to 6 weeks. That's not a supply chain issue, that's an inventory issue. Premiums on physical silver coins and bars have spiked to $8 over spot, the highest premium in 3 years. The spread between paper, silver, and physical silver is widening every single day, which tells you that the paper price is becoming increasingly disconnected from physical reality. And here's the part that should terrify every single person watching this. The zero delivery rule in Shanghai is permanent. This isn't a temporary emergency measure that will be lifted when things calm down. The Chinese government has fundamentally restructured their silver market to ensure that private citizens can never again accumulate significant quantities of the metal. This represents a philosophical shift in how governments view precious metals. For decades, Western central banks tolerated private gold and silver ownership because they believed that fiat currency was so dominant that hard assets didn't pose a threat. That era is over. Governments around the world are waking up to the reality that precious metals are strategic resources critical to modern technology and military power. They're realizing that allowing citizens and foreigners to hoard these resources is a national security threat. China has made the first move to lock down their supply. Other nations will follow. We're entering an age of resource nationalism where governments will prioritize domestic industrial needs over the property rights of investors. If you think America won't do the same thing when push comes to shove, you haven't been paying attention to history. Remember 1933 when FDR confiscated private gold holdings through Executive Order 6102? Remember 1971 when Nixon ended gold convertibility of the dollar without warning? The United States government has a long history of changing the rules when the financial system is under stress. And right now, the financial system is under more stress than at any point since 2008. The U.S. national debt just crossed $38 trillion, the commercial real estate market is imploding, and regional banks are sitting on hundreds of billions in unrealized losses. The government needs silver for defense manufacturing, for the solar boom mandated by climate policy, for the semiconductor factories being built with CHIPS Act money. Do you really think they're going to let retail investors and foreign buyers compete with those strategic priorities? Do you really think they're going to allow the price to rise to $200 or $500 when that would make every government contract for electronics and weapon systems economically unfeasible? They'll do exactly what China did. They'll implement allocation rules that prioritize approved industrial users. They'll force cash settlement on futures contracts to prevent physical drainage, and they'll tell you it's for national security while they loot your purchasing power. The window to acquire physical silver at anything close to the current price is closing rapidly. Not in years, not in months, but in weeks. Once the contagion from Shanghai reaches Western markets, once the American public realizes that China has effectively removed 300 million ounces of annual demand from the supply equation by banning imports, the panic buying will begin. And it won't be retail investors driving the price this time. It will be industrial users scrambling to secure multi-year supply contracts before the shortage becomes critical. It will be sovereign wealth funds realizing that silver is now a geopolitical asset that must be controlled. The price will gap up overnight. You'll wake up one morning and silver will be trading at $150 with no metal available below $180 in the physical market. The dealers will put up out-of-stock signs, the mints will announce months-long backlogs, and the government will start talking about rationing. This is not speculation. This is the logical conclusion of the supply-demand imbalance that China just made exponentially worse. Look at what happened in Shanghai and understand that it's a preview of what's coming everywhere else. The zero delivery policy is spreading. India, which has been importing record amounts of silver, is now considering restrictions on precious metals to preserve foreign exchange reserves. Russia has quietly banned silver exports, claiming the metal is needed for military applications. Even Mexico, the world's largest silver producer, is debating export quotas to ensure domestic industrial supply. The entire global market is fragmenting into nationalist blocs. Every country is going to try to secure their own supply first and export only the surplus. But there is no surplus. There hasn't been a surplus in years. The deficit between mining production and industrial demand has been filled by recycling, by investor selling, and by drawing down above-ground stockpiles. But the stockpiles are nearly empty. Investors have stopped selling because they see what's coming, and recycling can't possibly fill the gap. The mathematics of the shortage are undeniable. Global silver mining produces about 830 million ounces per year. Industrial demand is conservatively estimated at 700 million ounces annually and rising as green energy and technology sectors expand. That leaves only 130 million ounces for investment demand, jewelry, and coins. But India alone just imported 36 million ounces in 2 months. If they maintain that pace, they'll consume 216 million ounces this year, far exceeding the global surplus. And that's just one country, not counting demand from the United States, Europe, Japan, South Korea, or any other developed nation. The conclusion is inescapable. At current prices, global silver demand exceeds supply by at least 100 million ounces per year. That deficit has to be filled by someone selling their holdings, but who's left to sell? The Chinese government just banned their citizens from selling. The ETFs are seeing inflows, not outflows, as investors flee paper assets. The industrial users can't sell because they need every ounce for production. The only entity left with large, unallocated stockpiles is the Bullion banking system. And those banks are terrified, because they've been running the same fractional reserve scam in London and New York that the Chinese banks were running in Shanghai. They've sold far more paper silver than they can actually deliver. The zero delivery rule in China is their worst nightmare coming true because it proves that the scam can be exposed. It proves that when push comes to shove, governments will side with industrial users over financial institutions. And it proves that the paper price is a fiction that will collapse when physical demand overwhelms available supply. This is why I'm telling you with absolute conviction that you need to act now. Not tomorrow, not next week, not when you finish researching or when you have more cash available, but right now, today. Every single day you wait is a day closer to the door slamming shut. Go to your local coin dealer today. Buy whatever physical silver they have in stock. Don't wait for a price dip. Don't try to time the market. Just buy and take possession. If your local dealer is sold out, go online to the major bullion retailers and order now. Yes, you'll pay a premium over spot. Yes, delivery will take several weeks, but you'll get your metal. If you wait until after the shortage becomes mainstream news, you won't be able to buy at any price. For those with larger portfolios, consider allocated storage programs where you own specific bars with serial numbers in insured vaults. Make absolutely certain that your silver is allocated, not pooled, because pooled accounts are the same fractional reserve scam that just blew up in China. You want to own specific physical metal that cannot be loaned out or rehypothecated. And for the love of all that is holy, get out of paper silver. If you own SLV or any other silver ETF that doesn't guarantee physical delivery, sell it immediately. Those shares are claims on a pool of metal that is almost certainly smaller than the total shares outstanding. When the shortage intensifies, those ETFs will either suspend redemptions or force cash settlement at whatever price the trustees decide. You'll be left holding worthless paper while the physical market trades at triple the price. The great wealth transfer is happening right now in slow motion. The people who understand what China just did, who grasp the implications of zero delivery, are quietly accumulating as much physical silver as they can carry. They're going to emerge from this crisis with their wealth intact and massively multiplied. The people who ignore this warning, who assume that the price will always stay low and metal will always be available, are going to be wiped out. They'll be holding cash that's being inflated away and paper silver contracts that will be settled for pennies on the dollar. Which side of this divide do you want to be on? History is screaming at you that this is the most important financial decision of your lifetime. The free market for silver is dying, China killed it first, but the contagion is spreading. When it reaches your doorstep, when your government announces their version of zero delivery, it will be too late to act. The metal will be locked up in government stockpiles and industrial supply chains. You'll be left on the outside looking in, watching the price rise to levels that seem impossible today. Don't let that happen. Don't be the person who reads this warning and does nothing. Don't be the person who looks back in 5 years and says, I knew this was coming, but I didn't act. The information is in front of you, the evidence is overwhelming, and the timeline is shorter than you think. Shanghai has shown us the future. Zero delivery is the new reality, and it's coming to a market near you. Get your silver now, while you still can, because tomorrow the door might be locked. This is your final warning. The collapse of the silver market as we knew it has begun, and only those holding physical metal will survive what comes next. Act now or regret it forever.